Hey guys, in today's video, I'm going to be going over every single thing you need to know about trading candlestick patterns. And by the end of today's mini course, you're going to be a pro, you're going to be an expert at locating these high probability trades when it comes to the market, whether the market is going up or whether the market is going down. And don't worry if you're brand new, I'm going to be showing everything step by step from A to Z, sharing my screen, showing you exactly how we're able to find these setups live in the market today. So for those of you that are ready, I want you to screech at the top of your lungs and yell, "I'm ready!" And sucker punch that like button right in the face while I roll the intro. Let's get started. So in today's video, I'm going to be starting with the very basics to bring the brand new people up to speed. And throughout this mini course, I'm going to be adding on and building upon everything that I teach you and ending this video with the advanced techniques on how exactly we're able to find these entries. And also I'm going to show you exactly what not to do and the big mistakes that most traders, especially brand new traders, make when it comes to reading these candlestick charts. So let's go ahead and get started. Now, there are a few ways we can look at a price chart. You can see here that these are all the different ways you can actually look at a price chart. Just to give you an example, these are called what's called bar charts. And this is what's called a line chart. And people that have traded on Robinhood are probably used to this type of chart where you literally just see a line going up and down. And this one right here is called the Japanese Candlestick chart. Now, the difference between a line chart and a Japanese candlestick chart, and by the way, the Japanese candlestick charts, obviously you can tell by the name, it originated in Japan. But the Japanese candlestick chart is just a lot more detailed version of a line chart. The line chart doesn't give a lot of information, so you're not really able to understand and get the full story of what happened in the price as the price moved up and down. But the candlestick chart, you're able to see a lot more information. You're able to extract a lot more information from the market and figure out the exact story of what's happening in the price movement going up and down. But before I get into any of that, what I'm going to do really quickly, right under my face here, I'm just going to put a screen of price moving up and down because I want you guys to kind of get used to looking at the price moving as the time goes by. So just make sure throughout the video you keep an eye out on the candles just moving right at the bottom of the screen. So before we dive into this huge mess over here, let's go ahead and break down the anatomy of a candlestick. I'm just going to move down here to kind of give me some space so I can draw and explain to you exactly how these candlesticks work. So when it comes to the anatomy of a candlestick, there are only two components as traders that we care about. The first thing we care about is what's called the wick. The second thing we care about is what's called the body. Now, when we're looking at this, the body can be two different colors. And let me just kind of explain the two different colors that the bodies can be. The body can be either green or red, or depending on the chart that you're looking at, it could also be white or black, or other variations of different colors, depending on however you want to color code or set up your chart based on your preference. But the most common colors that you'll see are red and green. Now, here are the components that I want you to kind of pay attention to. Each candle has four very important points that we need to kind of be aware of. These points are what's called the open, the high, the low, and the close, which is why you kind of see these four numbers right here. So whenever you're looking at a green candlestick, these are always what's called bullish candles. Bullish, meaning they're going in the up direction. And every time you see a red candle, these are what's called bearish candles. Bearish, or in other words, going in the down direction. So let's talk about a bullish candle first. The four components. The first component when you're looking at a bullish candle is if you see a green candle, you need to understand that the candle opened up in that session, in that period at the bottom. This candle always would open up at the bottom, and the high of the candle is where the tip-top place of the wick ended. And the low of the candle is where the lowest point of the wick ended, and the close of the candle will always be above the open whenever we're looking at green candles. So green candles always open down and they close high. They always open at the bottom and they close above every single time you see a green candle. The red candle is the exact opposite. So the red candles always open at the top, and we have the highs, and then we see the lowest point that that candle went in that session, in that period. When I say period, I'm talking about depending on what period that you're looking at, whether you're looking at a 1 hour candle, a 4 hour candle, a daily candle, weekly, monthly, 2 hour, it doesn't matter. So in this case, let's assume this is a 1 hour candle. In this hour, in this single hour, the candle opened up here, the price moved up, and then the price went all the way down here. And at the end of this hour, when the hour finished, the price closed down here, meaning this candle has bearish momentum. This overall candle moved downwards. Now that we have this understood, you need to understand that the candles, as they're moving, as the candles are running live, and you can see it, the candles below my screen here, that the candles are always going to be moving like this, right? So if it started down here, this top part, since it's a green candle, the top part is always going to be adjusting, moving around until the hour finishes, and then the next candle will start. And where will the next candle start? The next candle will always start at the exact point where this candle finished. So this candle finished down here. The next candle, you'll notice, will start right here at the same spot where it finished. The next candle will open up, and depending on if it's going up or down, it'll turn green if it's going up, or it'll turn red if the next candle is going down. And the farther up and down it goes, it shows you where the next candle will close itself. Notice these will line up. Most of the time in the Forex market, there are some discrepancies over the weekends whenever there might be a potential gap, but that happens very rarely. So in this video, we're not going to go into it. We're just going to show you what happens 99.99% of the time, which is the next candle always opens where the previous candle closed. Now, just to kind of explain that as this candle is running, the same green candle can turn red as this candle is moving if the candle moves below where it opened, and the candle will instantly turn red, signaling that the sellers are in control. So now that you guys understood the two components, the wick and the body, and the four important pieces, the open, the high, the low, and the close, now we can move on to the next topic. Depending on what the body is showing relative to the wick tells a completely different story. So we need to understand how the body is shaped relative in relation to the actual wick itself. So now let's go ahead and run through some examples. I'm just going to go ahead and delete these and show you some examples so we can understand what is being told whenever we're looking at these candles. So now to fully understand the story of what's happening in a candlestick, we need to understand how the relation of the actual wick is relative to the actual body itself. And for this example, let's go ahead and go over a green, or in other words, bullish candle, which means it opened down here and it closed higher in the session, in the period, than it started. Now, if you see that the body in relation to the actual wicks, if the body is a lot bigger than the actual wicks, this means that the buyers are in control, because you have to think about, in this 1 hour time frame, the price started here. Think about it. The price started down here when the candle opened, and then the price lowered all the way to down here at the lowest point. And at that time, this candle was red, and then the price eventually moved up, and then it turned green again, and then it continued to go up to the highest point. And then before the session, before the hour finished, it went down a little bit. But overall, the majority of this 1 hour time frame, it moved in the up direction. But here we notice that the body is actually a lot bigger than the wicks themselves, which shows that there's a lot of buying pressure in this specific candle. So now let's look at another example where there's the same type of wick, the same exact wick. But in this case, let's say the candle started here, it opened up here, it did its thing, it started moving around, but let's say the candle closed down here. This tells a completely different picture. Even though these are both bullish candles, the second example tells a completely different story, because what happened, the candle started here, went down, went all the way up, but before the hour finished, the sellers started going in control and started pushing the candle down until the candle closed here. So while this is indeed a bullish candle, this would be what's called a very weak bullish candle, which shows a lot of selling signal. It shows that a lot of sellers are in control before the hour or whatever period ended. Now, if the same exact candle ended down here in a red, this shows that the buyers were initially since the candle started here, the buyers were initially in control. They pushed it all the way up. And then before that session ended, the sellers came in and pushed it down. And now the sellers are definitely in control. So this is a very bearish candle, which should possibly signal that you should be looking for what's called sells. You should be looking to trade in the down direction. And that's what kind of shows how the body is relative to the wicks. You'll notice that the body is a lot smaller compared to the wicks themselves, which shows this was a huge rejection. The price went up and it completely rejected and started going back down. Now, another example that you might have seen in the charts is something that has a very small shadow or small wick, and then the body itself is also pretty small. It could be red or green. The point is, if you see a candle like this, this shows a lot of indecision in the markets, meaning within that whole hour that the price just kept moving up and down in a small little range, and the market wasn't really sure on which direction it wanted to go, meaning the market is kind of unsure and it has a lot of indecision. Whether the body is green or red, the body is small and the wicks are small as well, showing the market didn't really know which direction it was going. Now, in the case that the candle is a lot larger relative to the body, this shows this candle, this hour, this time frame had a lot of commotion in the hour, but when it ended, it just ended pretty much right where it started. Now, one more example I want to give is if the price doesn't have a wick on one of the sides, this shows that the price started here, went all the way down, and ended right back up, which shows a very high rejection of the price going pretty much where it started. So in this case, there's a lot of buying pressure. Why? Because the price started up here and it went all the way down, and before the hour closed, the buyers pushed the price all the way back up and ended up closing the price here. And what happens if this candle continues to go up? It'll turn green, which shows even more buying pressure to show that this is a very bullish candle, which showed a huge rejection on the way down, and it continued to go back up. And this candle could just as well continue to go even higher, which just confirms that this is a very, very bullish candle itself. So now that you guys understand that and have given you plenty of examples, we need to move on to the next step. Now, remember when I told you earlier, looking at a chart, you can look at it in various different time frames: 1 hour, 2 hour, 4 hour, daily, weekly, monthly, right? And depending on whatever time frame that you're looking at, the candles will be showing you something different, right? They'll be shaped differently. And let me just kind of explain what I mean by that. Just quickly going into the going back to the chart, you'll notice that this is a 1 hour chart, but going to the 2 hour chart, you'll notice, just by looking at the candles, you'll notice that the candles look a little bit different. Notice there's one huge candle going down in this candle here in the 2 hour chart, but going back to the 1 hour chart, it splits it up into this candle and this candle. So both of these candles combined, both this candle and this candle combined would form what's called that one single 2 hour candle, which goes straight down. And we need to understand exactly how these candles are formed whenever we're combining these together. So let's go ahead and go back to these examples so we can kind of show you exactly how to draw these and understand these and think about these whenever we're combining these different candles. So let's go ahead and delete all of these so we can just kind of get started. Okay, the first thing we need to think about is, here is one candle. Let's just say this is our number one, and let's just say this is the body for this first candle here. It started down here and it closed up here, right? And now let's say the second candle since it started over here, the second candle, the body would start up here, and the candle could either go up or down. It doesn't matter. But in this case, I'll just show that the candle is going down, for example. And this one will make it red because it's going down. And the wick could do whatever. Let's just say the wick went all the way up here. And let's just say the lowest point that this whole candle went was down here, just for example. And let me just put the body in the front. Now, when we look at these, when we're looking to combine these candles, thinking about them in a 2-hour time frame, we need to understand and think to ourselves, in this whole session, in this whole period, where did the price start? In the very, very, very beginning. Where was it open during the whole session? So obviously, since this is a green candle, it opened down here. This is where it started. Now we got to think about, where did this whole session end completely? This session ended over here, because this is where the close was on the second candle. It's red, that means it closed at the bottom. So now we need to think about, looking at this on a 2-hour time frame, what would the actual body look like? This body, we would need to draw it opening in the same exact spot where it opened, right over here, right where it opened, and we need to close the 2-hour candle where the whole 2-hour session closed, which is right over here. So this candle would have closed down here in the 2-hour time frame. Now we need to think about, in this 2-hour time frame, what was the highest point in this whole period? The highest point that this candle got was up here in the whole session. And where was the lowest point that the candle got in this whole session, which was all the way down here. So the candle's high and low would be right over here. So looking at these two candles in a 2-hour time frame, this exact story would be translated into this. So I hope you guys understand exactly how these two candles are combined in one picture, depending on whatever time frame that it's in. And I definitely encourage you guys to play around with this on your own by looking at the charts and kind of seeing how the 1-hour candles are combined to make a 2-hour candle. Matter of fact, I dropped a link right down in the description to allow you to pull up a chart just like this. You don't have to sign up or anything. Literally, when you click the link, it'll just open up a chart and you can start playing around with it, and you can literally see the charts moving up and down, and you can just kind of adjust the different time frames, just like here, just like what I'm doing now. So feel free to click the link in the description and just pull up a chart and just play around with it. Now, one more example I want to give you is I want to show you an example of the 1-hour time frame, comparing it to the 4-hour time frame. So this is hour number 1. Hour number 2, let's say the next candle started. Obviously, it would start where this one ended. So let's say the next candle started here, and let's say the next candle ended here, and the wick for this candle, let's just say it was something like this. And obviously, since it closed above, this would be a green candle, and it would look something like this. And now we're looking at hour number 4. Since this candle ended here, the next candle would start where the candle ended. And let me just go ahead and draw the wick really quickly, just for example. Let's say the wick was something like this, and the next candle would have started here, and you would have seen the price moving up and down depending on whatever the candle is doing. And let's just say that the candle itself ended up here. Now I want you to think about, same thing, what would this whole session look like in terms of a 4-hour period? So let's just kind of go through that really quickly. We know the whole session started here, and we also know the whole session ended up here. So the 4-hour candle would literally start exactly in this spot where it started, and it would end exactly in this spot where the candle ended. And what would the wicks look like? The wick would start here, and the bottom of the wick would be down here at the very bottom. So the candle would look exactly like this. This is exactly what the 4-hour candle would look like. This shows that within this 4-hour period, even though the price was moving up, went down, started moving up, there was a lot of buying pressure in this whole period, because you'll notice the price started here, went up, went down, did its thing, and before the 4-hour period ended, it closed at the very top, creating what's called a very bullish candle. Okay, so now that I've given you a few examples, you should be proficient enough to be able to understand and visualize what these candles will look like depending on whatever time frame that you're looking at. So here's what I've done. I've went ahead and created this brand new example, and what I want you to do is I want you to look at these 4 1-hour candles, and I want you to think to yourself, what would these candles look like in terms of a 4-hour time frame? And I want you to pick it between A, B, C, and D. And what I want you to do is I want you to go to the comment section and write your answer, whether it's A, B, and C, and D, because I genuinely do care. I really want to make sure that you guys fully understand this concept because it's extremely, extremely important. Now, I don't know any other Forex YouTuber that has this type of audience interaction, but I genuinely do want to make sure that you guys fully do understand this because it's really, really important. So what I want you to do right now is pause the video if you need to, think about it, take some time, and I want you to write A, B, C, or D, depending on what you think the 4-hour candle will look like when you combine all 4 of these candles together. So go ahead and do that now. I'll give you 5 seconds to pause it. 1, 2, 3, 4, 5. Now, I'm not going to tell you the answer in this video. I'm going to check the comments in the comment section below. So hopefully you've written down your answer. Now let's go ahead and move on. Now let's go ahead and look at this chart and talk about what most beginner traders do when they're trading with candlesticks and what you should not do. Most people, especially brand new traders, whenever they're looking at a candlestick chart, they see something like this. They see a bunch of candles that are very bullish candles, and they tell themselves, they say, you know what, the price is going up. And trust me, I've seen this so many times. I take phone calls all the time with brand new traders, kind of seeing where they're at in their situation, and I ask them, what are you currently doing for your trading strategy? And a lot of people tell me, and it's surprising, they say, I just look at the candles on my phone. When I see the price going up, I just enter a buy position. And so this is what most people would do. They would see the candles going up, they would see all these green candles, and they say, wow, the price is going up. So what they would do is they would enter a buy position in hopes that they'll be able to ride that wave just by looking at the candles. And that's not what you should be doing. As you can see, what usually happens to most people is the price completely goes against them and it hits their stop loss. This is what most people end up doing, and this is the wrong way to trade by looking at the candles. I'm going to show you how to do this the correct way. And for those of you who are serious and ready to learn how to do this actually properly, go ahead and go down to the description of this video and click on the link to go to part 2. And actually, before you do that, it really takes a long time for me to make these videos and edit them properly to make sure I explain everything the correct way so it's easy and digestible for you guys. So it'll mean a lot to me if you guys hit the like button on the video and just engage. Put a comment down below. And if you haven't subscribed to the channel already, be sure to subscribe and hit that little notification bell so YouTube will actually notify you whenever I upload the next video. So thank you for watching part 1, and I'll catch you guys in part 2. Take care, guys. The time is actually moving because these candles are moving right now. So this trade that we're in right now, starting from our entry, if you would have entered right here at the bottom of this candle, this trade right now would be in 86 pips profit right now at the time of this recording.